Today is May 13, 2023, 12:03 a.m. It is time to reflect on the day trading life. Right now, I am struggling to become consistently profitable. The reason is the reason is um, it seems to me there's a couple things that are missing from my day trading skill set. One of them is uh, inability to comprehend at this stage that everybody, uh, everybody has less than 100% accuracy. That's the first part. And that is the most important part. So that would be called stop loss. And the reason why I avoid chasing further into understanding how that works is because the market sometimes works in my direction, and that satisfies my need to being a profitable trader at that moment. Now that I look at it, it doesn't really make sense because what I need to do is be profitable all the time for a period. For a period, there could be losses, but in general, for a period between a segmented period, I need to be profitable. So for a period of 1 month, I need to be profitable. And for a period of 1 month to the next month and the next month, I need to be profitable. That is consistency. What I've seen so far in my trading career is that uh, probably that's what uh, novice day traders do, because they're obviously novice because they're unable to be consistent in extracting money from the market. That's the clear definition of being a novice day trader. A novice day trader engages in the act of trading stocks where the results are sporadic and, generally speaking, in a downtrend. That is a clear definition of a novice day trader. Professional day traders, on the other hand, is able to consistently take money out of the market within a certain period. That is the distinction. Now, I generally have certain periods where my trading is very successful. It's successful for a range of periods. And then there will be 1 or 2 days or certain periods of time where my trade becomes extremely negative, essentially erasing the gains that I have. Now, that is a given. That's what I'm facing right now. So, how do I fix that? From what I've seen so far, doing some research on other professional day traders, is that, for example, one day trader goes by uh, figuring out a particular setup by uh, reasoning the direction of the stock and the possible movement of that stock based on the research. The research, for example, provides between a set entry point to a stop loss point and to the take profit point. That is a research that defines those parameters for a trade, essentially called a playbook. And then once that's taken care of, what I've seen on the recent video is that this professional would set the trade. However, that trade would reverse and and take out that trade. And so between period of A to period of B, within a time frame, the stock will perform a intermediary direction, which causes which even though the general direction or the general trend is in one direction, it is possible between those two ranges to fluctuate between uh, and contrary to the direction of the general and overall trend. So that is the same thing as a earning right after earnings report, a stock will drop, but it'll reverse and then start to drop. So within that short period of time when the stock is reversing, the stock is actually going in the reverse direction of the general trend. So that can cause the stop loss to trigger. And therefore, the professional at this point, after seeing that, by making a trailing stop loss or increasing the stop loss such that there is a small amount of profit for that particular situation. And this professional set based on the same thesis, because the trend is still intact. And therefore, the professional set it, which essentially later on prevailed and became a profitable trade. So that in itself is a formula for every trade that I make, even in a scalping scenario. I have to identify a particular situation. I have to identify a particular setup, and then I have to have a specific criteria for defining what the stop loss is and what the take profit point is. Those two parameters are clearly substantiated based on the reasoning that I create on that stock. So now that is essentially the formula for every trade that is made by every person who is in the practice of and the practice of the profession of and the business of being a day trader. That is it. To recap, essentially, a professional day trader, a professional stock trader, essentially creates, based on reasoning, the thesis of the trend. And that trend is the foundation of the initiation of a trade. And once that has been initiated, then there has to be a couple points that needs to be clearly defined, such that the when the profit is taken, then the profit is taken based on a favorable movement backing up the reasoning that was used to create that trade. However, if the stock either takes an intermediary step in trading and in moving in the direction of the trend, then it is possible to reach the extremes of the outer bound of the stop loss that was created in making that trade, which will cause my trade setup to be stop lossed. However, on a long-term basis, the reality is reasoning provides the thesis that defines the direction of the stock. And then that also provides, based on the behavior of the stock, the stop loss position and also the take profit position as well. And with the and clearly substantiating this even on a scalping scenario over and over and over again will minimize the occurrence of these normal occurrences where even with 80% success rate, if the trade is 80%, that means that 20% of the time I will be losing, and I have to make up my mind how much I lose, and I have that full control in my trade. And when I have full control of that loss, then I can minimize that loss, and then uh, be able to uh, maintain the higher percentage of gains and be consistently profitable uh, going forward. So that is the objective that I've seen so far, and that will minimize the losses that I've incurred. And there is a way that allows me to to use that situation. There is even there's metaphor. I'm using metaphor to do FTMO trades, and I can use that. And so I plan to take advantage of that situation. I plan to essentially I plan to move in that direction now. As a that is the difference between a professional and a novice day trader. So I was thinking of the situation where it's an intraday situation where I define where the trend is moving, and within that environment, when the right situation arises, then I take the trade. But if the right situation is not there, then there's a variability uh, variable uh, it is possible. The variability of that trade is a fluctuation in the magnitude of the drawdown. And in order to minimize the drawdown, then I have to be precise in the timing of my trade. And so based on what I've seen in the past, is I've scratched my head and I tried to figure out why I was being so emotional about my trade. It is the art of understanding and fine tuning those points. The take profit and stop loss points are crucial in determining based on where the entry point is. Combining those three things defines. I almost sneezed there. Or it is my subconscious saying, hey, bingo, bingo, bingo. So I will elaborate on that now. On the next video, I'm going to elaborate on how I'm going to do that, what the critical components of a really good trade is.